Hi everyone, it's Sarah from Homes for Harrogate. So recently there's been some concerns amongst landlords that they're going to lose their tax relief on their buy-to-let mortgages. So today I've brought in the expert, I've brought in Rick Sherman from Howard Matthews Partnership, and he's going to go through some bits and pieces with you to reassure you that it isn't all lost and buy-to-let is still a good option. Hi Rick, how are you?
Yeah, very good. Very good morning.
So these tax relief changes on mortgages, who do they affect?
So they primarily affect individuals who rent out residential properties who have buy-to-let mortgages to finance them. Okay. There are a couple of groups who aren't affected by these changes. Firstly, people who are renting their properties through limited companies. Okay. And the people who have what's called furnished holiday lets, so your Airbnb type people.
Yeah, service accommodation.
But other people have got to have a think about these changes.
Okay, lovely. So are these changes in place now? When are they coming into force?
Yeah, so they came in, they were announced a couple of years ago, but they've just come into play from this April. But they're phased in over 4 years, so it's not going to be until April 2020 that they're fully in place. It's a bit of a transition for the next 4 years.
Right, okay, so if some landlords haven't been affected yet, it doesn't mean that they're not going to be.
Exactly.
Okay, lovely. So how is it going to affect landlords then?
So currently you can get full income tax relief on your mortgage costs. So that's just your interest costs rather than repayments. So you take your rental income, deduct your other costs, like agent fees, property repairs, insurance, things like that, and you get a rental profit, and that's what you pay tax on. Now what's going to change is that you aren't able to necessarily get full income tax relief because it comes out as a credit of 20%. So some landlords pay tax at 40 and 45%. Yeah. So you're not going to be able to get full tax relief if you're one of those landlords.
So it could end up costing some landlords a bit of money?
Yeah, it doesn't affect all landlords. It depends what other income you have, how much rental income you get. But it's something that you just have to look at and see if it's going to affect your bottom line profit and how much tax you pay.
So it's very much a case of not one size fits all, it's individuals that would need to speak to somebody like yourself about their individual circumstances.
Yeah, so you need to look at how the loan to value and how much their mortgage cost is as a proportion of all their other costs, to work out if they're going to be affected. And as I say, it's phasing over 4 years, so it might not necessarily affect them for the next couple of years.
Okay, so is there anything else apart from getting some sort of expert advice that they need to be doing right now?
Well, there's a couple of kind of planning tips that you can do that it's worth taking expert advice on. For example, running your properties through a company rather than an individual name is something that quite a lot of people are doing. There are tax consequences with doing that kind of thing, so the best thing is to seek advice before you go ahead and
just
doing
form a limited company. Yeah, so basically in conclusion then, there are tax changes to mortgage. It's for landlords, but they need to seek advice, and with proper planning it shouldn't be too much of a concern for them depending on their individual circumstances.
Yeah, everyone's unique in their own circumstances, so as long as you seek advice then these things shouldn't bite too badly.
Lovely, thank you Rick. So that's Rick Sherman from Howard Matthews Partnership, and I'm Sarah Johnson from Homes for Harrogate. Thank you for watching.